Hey folks, Dan Frio here with your closing bell for January 16th, 2025. So what's happening? Mortgage rates are down once again today. Well, we really didn't have that much data coming out today. We had the inflation numbers yesterday and the day before. So why today? Why today are mortgage rates dropping? That's our topic for today. So my name is Dan Frio. Hopefully I'll be your national or nationwide mortgage loan officer because I'm licensed in all 50 states now, as well as Puerto Rico. So if you're out there trying to buy that first house, maybe looking to buy an investment property or looking to refinance, hopefully I'll be your guy. I'll give you all my information at the end of this video because I don't only work for a bank, which is one of the largest banks or holding companies in the country when it comes to mortgages. We're also a big mortgage broker set up with over 30 different lenders. That makes our slogan this year: one application, one credit pool, and we're going to shop your loan to over 30 different lenders. So now let's get to today's data. So while you're here, trying to figure out what's going on with these things. So mortgage rates continue to drop. Will they hit in the sixes by tomorrow? I don't know. We had a pretty good rally, and I'm going to show you what took effect or what took place today. So right through here, I would just want to go first to the bond market. This is what happened today. And this is, if you look at this chart, you're going to say, okay, what happened right here? And I was saying the same thing. I'm like, I basically yelled out there and I'm like, we went from a -3 in the MBSs up to a +20 within like a blink of the eye. So what happened? Well, I looked into it and I found out some great information for you guys. But look right through here. Here's the last 2 days of what's happening. Look at this big gap that was placed yesterday. And then here's what progressed throughout the rest of the day. So this is where we are over the last 2 days when it comes to mortgage rates. So you're probably saying, Dan, there's a price up there. Well, yeah, there's a price up there. So what I want you guys to understand is this chart goes up, the rates are coming down. So this is a fantastic chart. Even if you saw it today and this is like your stock, you'd be like, okay, I'm in a good position. Well, our concern now is there going to be a pullback? Is there going to be profit taking in the bond market and so forth that should really push rates back up again? Well, the concern that we had was kind of resolved hopefully today, but because we had Federal Governor Waller come out and he says, well, there might be a rate cut or several rate cuts this year. And that basically shocked the market because he's saying as long as inflation stays in check, and about 6 months ago they said it was going to stay in check, we'll be okay. So let's go over to see what his take is on this. And then when we come back, I'm going to show you the market's reactions all the way through and even what the 10-year Treasury is doing. I know mortgage rates don't follow the 10-year Treasury, but you guys have to understand the bond market when it comes to mortgage rates. So let's get over to the federal chairman, he's not the chairman, but he sits on the Federal Reserve Board. Let's see what his take is on the market right now.
Joining us now for CNBC Exclusive is Federal Reserve Governor Chris Waller. Governor Waller, welcome to the show. Good to see you.
Hi, Sarah. Good to see you. Thanks for having me on.
Well, it's good time for you to be here because we're in the middle of this raft of economic data. We had really strong jobs last week, sort of more benign inflation report in CPI yesterday, and then some mixed data today around retail sales and jobless claims. I'm just curious how you're interpreting it all and what kind of picture it's painting for you.
Yeah, the inflation data that we got yesterday was very good. It's the 6th month out of the last 8 where we think core PCE inflation will come in below 0.2, which is getting very close to what our 2% inflation target would be in terms of core. So the inflation news is good. We had a couple of bumpy months there in September and October, but it looks like it's getting back to trend. We'll have to wait and see whether this continues. I believe it will be. We'll see some base effects come out, but last year we got a shock with inflation in January and February. They kind of put us back in terms of our progress for cutting rates. I'm hoping that doesn't happen again, so that if we continue getting numbers like this, it's reasonable to think that possibly rate cuts could happen in the first half of the year.
Rate cuts in the first half of the year. Market's not pricing that in, but that's what you're looking for?
Well, I'm saying it depends if, and always the big word if the inflation data continues to come in like it has been. If we don't, if we get a surprise like we did last year, then we're going to have to stay on hold until we get inflation coming back down. But I'm optimistic that this disinflationary trend will continue, and we'll get back closer to 2% a little quicker than maybe others are thinking. But that's my view.
Why? What do you think is keeping it sort of stubbornly high? Seeing shelter prices still up there, food prices are still rising a bit. I'm just curious what you're watching that gives you confidence that you'll get to 2% sooner.
Well, like I said, 6 of the last 8 months, we're running close to, not too far off a target. And I think there's no reason to expect that will reverse or change. So looking at the 12-month year-over-year numbers, it doesn't look like we made a lot of progress on inflation. But like I said, if you go over to the last 6 to 8 months, core PC inflation has been coming down, and I think that will continue. Now, we had a big shock last year at the beginning of the year. There's some concerns there might be another one of these beginning of the year kind of price shocks. I'm hoping that doesn't happen. So if it doesn't happen and we continue to get through a couple of good months of data, then the base effects will kick out from last January and February, and we'll see some further progress on inflation going into the second quarter of this year. So based on that, if inflation's down, the labor market stays solid, then you could start thinking about restarting rate cuts later, in several months from now.
Right, you're not.
Okay, so let's leave it at that. So what he's saying is, when he first started saying it, he said cuts. I don't know if you caught it, but it was plural. So then I'm like, okay, what does the CME FedWatch tool say? So we're going to go look at several different things right now to kind of figure out where the projection is for mortgage rates. So the first thing I want to show you is the 10-year Treasury. The 10-year Treasury just tanked recently. And if you go over to here, this is a 5-day chart of the 10-year Treasury. Now, if you saw this chart for a stock, you'd say like, oh my goodness, what just happened? It just plummeted. So is this going to continue? That's the concern we have. And even like the Federal Reserve person said, if. But he was saying 6 out of the 8 last readings on inflation were coming down into the target range. So I'm still expecting we're going to get there sooner than later, because you have to look at it this way. If inflation last January, was really high, okay, that's a part of a 12-year average or a 12-month average, okay? So as that number moves off, then you go to you have a February to February. And then as that number moves off, you go to March to March. So when you get those higher readings back last January and last February, as they fall off, just by them falling off is going to bring down the inflation rates. So you just have to understand how it progresses forward. So that's one piece of the puzzle I think a lot of people are forgetting. Then you look at another piece of the puzzle, the CME FedWatch tool. Based on today's data, let me refresh it to make sure we're refreshed. The markets are still not expecting really anything from the Federal Reserve. Let's go to the aggregates, because we watch this on a daily basis. Well, it might. No, it didn't really. Yeah, it kind of picked up a little bit. But at the next meeting, there's no way that they're going to cut in 2 weeks from now, that I'm saying. Then from there, there's a 66% chance they're still not going to do anything in March. So I'm really not concerned what's going on in May further out. That's in this industry, that's like years from now. So in the next near term, I think we're going to have some stability. Once the new administration comes in, we'll at least get all their information so the markets can digest it and come out and figure out what's going to go on from there. So that's what we're looking at right there. In the stock market, it gave back. Here's Daniel Kwok again. He's a friend of mine and actually neighbor. So if you're looking, I'm trying to get them on a video with me, but they have a great strategy when it comes to paying your house off early. So hopefully we can have Daniel and his brother on here soon with us. But the Dow Jones, like we were saying yesterday, even Rick Santelli said earlier, he's like, a lot of times you have these massive gains and then all of a sudden it just gives it back. So like you're seeing in the Dow Jones, big rally yesterday, but it pulled back. The nice thing is we have in the bond market, it didn't do that pullback. We had just continued to go into the trend, and it's up, up, up and away. So I'm going to ride this rally as long as I can. So if you're working with us right now, I'm most likely going to float you. I talked to several of my clients today. I'm saying let's float. Let's just continue to ride this rally out. And then as soon as I see a reversal, because this is a huge pickup, guys, as soon as I see a reversal, if you're a client of mine out there, I will be locking you, because I don't want to give all this gain back that we've seen over the last 2 days. So that's what we're seeing right there. And the Dow Jones did give some back. NASDAQ gave 172 numbers back. VIX inched up a little bit. No concern there, though. Let's see what cryptocurrency is doing. Crypto is down just a tad. It keeps going back and forth between 100,000. And then let's go into oil. Oil's down. It's almost down 1.5%. That's great news when it comes to inflation. So that's what we're seeing right now. That's basically my report for today. But one last piece of advice. Before you go out there and you put in your application for a car or a mortgage, what I really need you to do, even if you're not using my services, go to optoutprescreen.com. What happens with this is when you apply for a mortgage and the company pulls your credit, or you apply for a car loan and that company pulls your credit, that data is now sold to other banks and maybe even like mortgage brokers and such. So they don't know anything about you. They're just buying that data. So do you want your information sold, your credit sold, your financials sold? Well, probably not. So go to optoutprescreen.com. It's free. I don't get any money from it. I'm just giving you some advice. Just scroll down to the bottom and fill it out. I did as well. So what this system's supposed to do is stop or eliminate the trigger leads. So if when you go out and apply for a mortgage or you apply for a car, you don't have to worry about that data being sold, and then you're going to start getting calls from all over the country, people you don't even know that really don't even know you, but they're just trying to solicit you and figure out if there's a need there. So to avoid all those, you might get 10, 20, 30 different calls. I did it when I was looking for insurance and I learned my lesson. Please fill this thing out so you can avoid all those calls. But if you want to work with me or my team, please reach out to us. So here's my slogan for 2025, and I'll explain why. I work at ServBank. ServBank is the 10th largest mortgage servicer in the whole country, so we're a huge entity. But we're also a large mortgage broker, setting up with over 30 different lenders because we can offer you their products and their rates by using our services. So why not one application, one credit pool? We're going to shop your loan for you so you don't have to go through this tedious thing of putting in your application every day, then calling up, following for rates, checking to see what the rate adjustments were for the day. Did rates change that day? Then you got to call the lenders back. Let us take the heavy lifting, folks. Just visit me at therateupdate.com. You can put in your application rate through here. We really don't want you to do that. Okay, what we want you to do is you're going to spend a lot of money on a new home. You need to vet who you're going to work for or work with. So schedule a consultation with us. There's me, David, and Alan. Or if you'd rather just call us, give us a call. You can scroll right down through here and call and talk to any of us. Right down through here, our 800 number is 844-775-5626. Or if you'd want to reach me personally, just shoot me an email. Give me the question you have. Give me your phone number. Be more than happy to call you and discuss any options or all the options you have available to you. So that's just how easy it is. So thanks for watching, folks. I greatly appreciate it. God bless. Have a safe evening, and I hope to God to see you here tomorrow. Take care, folks. I'll see you then. Bye-bye.